What's going on, guys? I hope you are doing well this morning. It is almost 10 a.m. Where I am at. I'm currently looking at the S&P 500 chart at this time. Some concerning things are popping up here. This is the first daily candle that opened below the 21 exponential moving average. So, that's pretty bearish, I'll be completely honest. Once that happens, we tend to see the market retrace further. Keep in mind this is the S&P 500, which is a precursor to even the Bitcoin charts, the Ethereum charts, basically, crypto blockchain charts as well. But anyway, I want to zoom in really quick here to the momentum oscillator tool that I like to use, Market Liberator. A couple of discerning things. So let's start from the top here. We did get a big sell signal a couple days ago, which is around this area. Not a good sign. The money flow is actually, as you can see, we created a high up here, and then we created a lower high right there on the money flow. You can see these two lines here. Also, money flow is still continuing to move to the downside. So as you can see, money is leaving this market at a rapid pace. Now, I wouldn't be alarmed, frankly. We have an opportunity on our hands. What I'm looking for regarding the S&P 500, given what I'm seeing on the 3-day here of the S&P 500. So we are getting a sell signal, but look at the money flow. The money flow recently turned blue, which means money is coming back into the market on a larger time frame. Now, if you go to the weekly chart, it's kind of waning negative money flow, no sell confirmation on a weekly perspective. So that's why I'm going to go off of the 3-day as opposed to the weekly. The weekly doesn't have enough data just yet. But overall, I'm sorry, I'm going to turn off my Discord. It's going off right now. Okay, sorry about that. Anyway, what I'm seeing here in regards to money flow on 3-day gives me some vote of confidence that yes, we could continue moving to the downside, but it's not the end-all be-all of what people are thinking of complete bearishness. What I'm kind of expecting, or more so hoping, but there is an opportunity for it, I will say that, is we have a low wave right here. We've come up, and now we're most likely going to cross down here. The momentum's going to come to the downside. But if that next wave can be higher than this previous wave, that is what we call a trigger wave with these momentum oscillator indicators. That trigger wave would initiate a massive move to the upside. So I am expecting consolidation sideways and down stuff for the S&P 500. I'll be completely honest with you. But I don't think that'll be the end-all be-all. I do believe that we could eventually see a bounce of rather strong power in the near future. Now, I do have some kill switch things that I'm looking at here. So basically a candle close below 3,963.91, basically the center of where all of our support lines kind of cross. A candle close below there would be terrible. Or somewhere a candle close basically below this line right here. I'm going to turn it yellow just so you can see it. A candle close below this line. It is currently acting as support. It has been acting as support essentially since October right here. And back into late December it was acting as support. So any candles that closes below this would be a huge issue. I will be completely honest. It will be a huge issue. But given as to what I've been talking about for months now, actually, is this descending broadening wedge has broken to the upside, and we're most likely to experience pumpage then dumpage. So overall, I do see this when in doubt, zoom out. I see this as a you know, a little bit, yeah, we're losing ground in regards to overall price value. But at the end of the day, I do feel like this is an opportunity to create a higher low instance. So realistically, I want to see that third, you know, higher low right here. So we have that low, we have that higher low. It would be phenomenal if we could see like a higher low somewhere right around here, because at the end of the day, if that were to happen, this, if you have any prior experience or knowledge in trading, this would be considered a three rising valleys pattern. That is very bullish, and usually these happen right before a huge move to the upside. Um, so that is something that I'm honestly looking forward to. We'll see how that goes, but that's just my theory at this time, the bullish case. But I must, you know, be honest with you that there are bearish cases that could also play out as well. Like I've stated before, candle closes below this support line, candle closes below the significant support line at 3,964. Because if we close below there, you know, we're most likely you know, either bouncing off of this line or breaking back into it. Basically, a daily candle close below this yellow line would indicate significant moves to the downside, most likely, because that would be a macro daily fake out and would most likely be testing the downside of this area at some point. Maybe even breaking through this little box area. I've always classified this little box area as some form of support here. So if we were to lose this zone, we're going down. Um, but you know, that is not the case at all. We're actually more so bullish than bearish, given what we're seeing here on the charts, as I described. But overall, still, I do see this candle close below the 21 exponential moving average. If we do get a candle close, I would suspect the 9 exponential moving average, which is this line right here, to be considered. Oh God, hold on, the magnet tool. I would consider this area as resistance, which is basically at 4,105 as resistance, and I would actually consider this as resistance as well, this general area at 4,077. So that's something I'm keeping my eye on at this time. If this daily candle closed, which is in the next 5 hours my time, ends up closing below this 21 exponential, you know, we know what happens after. Last time something happened like that, we got a confirmed candle close right here. We did get a rebound ultimately, but back testing this resistance and dumping lower over time. So be prepared for that. That's most likely, you know, something that could happen within the S&P 500. But overall, yeah, I'm going to move on to Bitcoin dominance really quick, and let's see what we got here. Okay, now this is daily Bitcoin dominance. Essentially, we had a bullish engulfing candle right here. Oh, but we got an interesting development yesterday. This is what I call, well, what the industry calls a gravestone doji. Okay, so this is actually a reversal. This is a reversal candle. Um, this to me indicates that we are most likely going to see alts outperform Bitcoin. That's kind of what I'm expecting at this time. Now, we did get a cross we did get a 9 and 21 exponential moving cross, funny enough, and a bullish engulfing candle. Now, we did get this bearish candle here, but how the bulls can nullify this candle is having a daily candle close above the wick, essentially this zone right here at 44.48%. So we're kind of seeing a dichotomy here. You know, we are seeing a bullish engulfing candle, and we did get a 9 and 21 exponential moving cross back to the upside, but we're also getting a bearish candle of a gravestone doji. So I'm kind of on the fence right here. I do like the 9 exponential moving average as support. To confirm any dumpage, to confirm any significant dumpage, I would need to see a candle close that completely nullifies this bullish engulfing candle, which is at 43.47%. So if I were to see a daily candle close below this line, then I would expect significant downside, and maybe we could kind of retest some form of support lines here. The closest support line on the daily from the hourly, or from sorry, from the daily perspective would be right around here. Oh, I didn't even have the line thingy. Hold on. Hold the phone. There you are. So this is a support line that I'm looking at. So if we do get a confirmation of a breakdown, which is below this white line, I would expect an eventual gradual descent to retest this support line or even break it. Given what I'm seeing here on the chart, I actually would consider this a triangle pattern breakout. If you kind of zoom out, you can see the triangle here a little bit. So yeah, ultimately, I do feel more so bullish than bearish. I'll be completely honest with you. The 921 exponential moving average cross and also the bullish engulfing candle right here. It's pretty hard for me to, yeah, it's really hard to bet against that. So I am expecting Bitcoin dominance to continue pumping to the upside versus going to the downside. But, you know, the kill switch area is 43.47. So if you see a candle close below that, then we're most likely going lower, and altcoins will significantly outperform Bitcoin. All right, so now let's go with Bitcoin versus Ethereum. So I like to look at this chart specifically because Bitcoin is the largest market cap of the blockchain industry, or the crypto industry, right? And then Ethereum is actually the head of the snake of altcoins. So basically, when Ethereum outperforms Bitcoin, it's most likely other altcoins are performing Bitcoin at more significant scales realistically. So right now, I've been talking about this for, damn, like weeks now? Months, actually? Yeah, since November. Yeah, shit. It's February already. It's insane. Um, that we're eventually going to break down back down to this area. Obviously, you know, we are consolidating. Kind of what we saw with Bitcoin dominance, we're seeing with yeah, it's kind of like what we're seeing with Bitcoin dominance. ETH and BTC has a similar gravestone doshi, and it's more mature. So that's kind of like what I suspect with potentially, if the support levels are broken, that's what we could see with dominance. But at this time, this triangle breakdown to the downside is still active, so I am expecting lower prices for, well, I would say that's not the proper term, because if you're trading between ETH and Bitcoin, you want to know what's holding value better, right? So in this case, in this scenario, Bitcoin is holding value better than Ethereum. So theoretically speaking, that Bitcoin has a more solid floor than Ethereum, if that makes any sense. So you're safer in Bitcoin as opposed to Ethereum. Okay, so I'm gonna skip to the Bitcoin chart. So the Bitcoin chart was really fun. Not gonna lie, the Bitcoin chart was really fun. I've talked about this level here, 25.3, as a take profit zone. Okay, and look how frickin' look at this. It's like almost to the frickin' dollar. Let me zoom in real quick. Super. I was off by like I don't know, like a dollar or two, maybe a penny. Yeah, a couple dollars, $4. Not that bad. But dang, like there was a couple of red flags. We had this daily candle close break outside of the Bollinger Band. That's not good. Usually that people sell at these levels here. So there was a couple of sell triggers for people. So the one, um, the Fibonacci level right here. Also 25.3 is a level that a lot of people had as a resistance line. So yeah, but you know, we are net gaining a little bit today. Um, right now, I would make an argument that the 9 exponential moving average is a potential bounce zone, as well as a 21 exponential moving average. The Bollinger Bands are still blue, as you can see. Bollinger Bands are still blue. The 9 exponential moving averages are still blue, so that means they're bullish, and they crossed a few days ago. And can have since confirmed the cross back to the upside. Also, this descending channel, which is predominantly bullish, has broken to the upside. So worst case scenario, even if price were to come back down, this downward sloping line would be acting as support. Worst case scenario. So there's a lot going for the bulls right now. Um, Given that the 0.786 was just completely eradicated as resistance, you know, we could theoretically expect a gradual breakthrough until we hit the 1618, which is at 30K. Um, but yeah, all right. So yes, we are having somewhat of a down day. Well, we had a down day yesterday at candle close. We are kind of having like I would say realistically, kind of like a sideways price action, sideways and down a little bit. But I wouldn't be deterred. I do think that what we're seeing here is a potential consolidation period. Now, I'm going to zoom in on the Bitcoin market liberator indicator here. So as you can see, these dots here is a strong sign of bullish continuation. Also, the money flow is thick still. I am noticing that there could be an opportunity for the bears to take ground if the money flow has a confirmed uh, close below the previous high, which is up here. Okay. Um, so, for example, if we see a red dot sell signal below this area, then I would definitely be concerned because that just means that we're losing momentum. We could see some some bullish divergences or hidden bullish divergences that may continue the market upward, but it's just not as strong as of a support as you would want to see. Ideally, usually those are precursors of significant moves to the downside. So just for perspective here, I do not want to see the money flow start trending downward like that, because if that's the case, then we're most likely going to see significant moves to the downside, which would be terrible. But you know, just wanted to give you that scenario, but so far so good. As you can see, these blue dots are pretty strong indicators of continuation. So, you know, when I zoom out here, um, you know, we could definitely still be in situations where we're most likely going to head to the upside as opposed to the downside. So um, even though we did see some significant moves to the downside yesterday, given what I'm seeing on the daily perspective, I do feel that like there's still more room to run from that perspective. But this was a great take profit zone. I'm really happy about that that setup that I've been waiting for essentially for man since I don't even know, probably since November, I would say. Yeah, but all right, so I'm going to move to Ethereum here. So Ethereum showing similar instances, just like everything else. Um, yeah, this is an older chart. I was using this one, and I did have this triangle pattern that broke to the downside, bounced off the Bollinger Bands, and broke back above it. Usually, the, there's a there's a website that has like these patterns and they kind of do talk about these fake outs on both the top side and the upside. So essentially what happens is if it breaks to the downside, then it breaks back into this pattern, you're most likely going to see bullishness afterwards and vice versa. So for example, let's say the opposite happened. So let's say this triangle pattern broke to the upside and then bounced off the Bollinger Bands and it broke back below. That would be super bearish and prices would most likely come back down to a lower support line to then consolidate and then kind of reestablish itself to then move to the upside. But the opposite happened in this case. So essentially there was a break to the downside. The Bollinger Bands were acting as support. We got this bullish engulfing candle 2 days ago, and since then we've broke back into this pattern, and we're most likely going to see bullishness to the upside. So I'm kind of glad that we kind of stumbled onto this chart, because I've been actually using this chart more as of late. Whoops. So this is a better updated chart here. Let me turn off the marker. So we did get a bounce off the 618 Fibonacci level, as you can see right here, the purple lines. Actually, let me turn this yellow, because last time I checked on the video, it was like super hard to see. So yeah, there it is. So we bounced off the 618 line, which I was kind of considering as support. And yeah, we just wicked and it just completely reversed, so that was real fun. Also, we did get confirmation that price did break below the Bollinger Band, and we did have a a bullish engulfing candle the following day right here, which is a pretty good sign. And then we had a bullish engulfing candle break through the exponential moving averages, so it's most likely that these are going to be acting as support. And we're also above this key level, which was like this red box zone that I've had, so as long as price can close above here, I think we're going to make some significant moves still. Also, what's indicative of a upward moving trend is higher wick highs and higher wick lows. So at this time, you could theoretically say that this is still valid of a potential higher low from the previous low. So that is very exciting. So that'd be a really significant ratchet up within the market and a strong establishment of new support. Now, I talked about this yesterday, so as long as we have candles below this thicker yellow line, let me turn it into something. Let me turn it into like let me turn it into a blue, right? Okay, so as long as we have candle closes below that blue line, I cannot be bullish. I cannot be bullish at all. Now, the reason being is because we're going off the 4-hour chart in this instance. You see the 4-hour chart had a double top pattern right here. So a top, another top, literally equal price action. And since once that was confirmed, we had a break to the downside all the way down to the 0.618. So this level is significant. This level has some serious significance. Now, we did have candle closes above it on the 4-hour perspective, but I want to see it on the daily perspective. The daily is what institutional traders harp on, really. So if we're able to get a daily candle close above this blue line, I'd feel more, um, what's the word, more confident in price continuing to the 1618, which is this red line here at 2,117. But anyway, I'm going to leave it at that. I appreciate you if you're still here. Yeah, but so far so good. We did get a buy signal 1, 2, 3 days ago. So so far so good. It's been playing out as such. We did kind of get like this momentum scare, and it happens. That's why I'm a big fan of the Bollinger Bands realistically. So let me turn off every indicator except the Bollinger Bands right here. So I'm just gonna delete this box so you can further see it. But yeah, the Bollinger Band's phenomenal because it's a great indicator for support and resistance in sideways markets. Now, just a caveat here, when the market trends to the upside and it goes parabolic. So parabolic runs are the one exception. So how it works with parabolas is that price will continue to close above the Bollinger Band, but then once it breaks back inside the Bollinger Band, that ends the parabolic move, and we get sideways action, which we've had pretty much since that close, which was a month ago. So we've had pretty much consolidation within this general range for some time now. So let me get like a new box area so you can kind of see what I'm talking about. Let me change the color. Let me change it to like a dark gray or something. Yeah. So yeah, we've kind of been in this area. So basically, my thesis has been once we have like a significant bearish or bullish candle outside of this range, that's going to determine the new trend. So right now, the bulls have some onus to take advantage of this opportunity because they're closer to this resistance. Now, you do not want to be longing this. Like you want to long support and short resistance. Okay, ideally. But obviously you want to take in consideration your momentum oscillators. So let me go to the hourly. Right now, momentum is heading to the upside, but money flow is heading to the downside somewhat. So you have to be very, very careful in these instances. Now, we are still getting some bullish continuation right here, so that's rather interesting. But like I said before, it's best to wait for daily candle closes to confirm, and right now we have 7 hours and 45 minutes till that actually happens. If we can close above basically 1,681.17, I would definitely feel better about a substantial move to 27%. A 27% move on ETH. Oh my goodness, that would be phenomenal. But, once again, we need that confirmation. Anyway, yeah, I'm going to close it out. I appreciate your time. Yeah, if you haven't already, please like, share, and subscribe. Yeah, if you have any comments or anything like that, please feel free to, share your thoughts or share what coins you want me to talk about. I kind of go off in the weeds sometimes, but I'm happy to cover some significant moves in those markets. But anyway, take care. Have a great rest of the day. I'll talk to you soon. Bye-bye.